All right, guys, we got four stocks to watch for this week's earnings. Not too many companies reporting. Things aren't looking good in the market. We're going to be playing it pretty safe this week. So we got Tuesday, market opens. Let's just go over what the four stocks are. First one's going to be Lennar. Second one is going to be Fedex, Blackberry, and then Carnival. So those are going to be four stocks we're going to be watching for. So let's go over some potential plays on these stocks. So starting with Lennar. Now, Lennar is a home building company. They're not doing too good right now just because of how the market is and how high inflation is. But eventually, like once the market recovers, it will be a great buy and hold stock. But for now, I can see some more downside to the stock. And for that reason, we're going to be playing some call credit spreads. So let's head over to a weekly expiration, head over to the calls, and let's pick out our strikes. We want something pretty high up. We don't think that it's going to do too well this week, especially for earnings. So we're going to be doing this something like a 72. We could do this. Sell the 71, buy the one above it. All right, we're going to be actually selling the 70 strike and then buying the one above it. And then we're going to be getting a credit of around $23. So what this means is as long as Lennar stays below $70, which is our lowest strike, we're going to be making a 23% return on our money because we're collecting a credit of $23 for a collateral of only $100. So if you have a lot more money, you could do multiple of these contracts. This is going to be a 23% return in a week, potentially. Next stock is going to be Fedex, reporting earnings Thursday after the market closes. Fedex did pretty well this week, as we can see, 14% in the past week, mainly because they increased their dividend yield by 50%, which is pretty huge, very good for shareholders, and it's going to be a very solid stock in the long run, especially if you love dividend-paying stocks. So if you love dividends, you love safe value stocks, Fedex, just buying and holding shares is the optimal play here. So next stock on our list is going to be Blackberry, reporting earnings Thursday after the market closes. Blackberry is one of those quote unquote meme stocks. It's down quite a bit, so it is a great dip buying opportunity. And as we can see, it is down quite a bit from its all-time highs of around $14 per share. So if you do like this company, buying shares or buying call options, because this is a cheap stock, buying some call options as a gamble, it's not going to cost you that much money. So for example, you could do a $6 strike call option, and this is perfect for people with small accounts, but it is high risk, high reward. So keep that in mind. It's only going to cost you $10 per contract, but you can potentially make a lot of money if Blackberry does pretty well. So last stock on our list is going to be Carnival Cruise Lines. Carnival is not doing good as well, down 66% in the past year. And the good news is that it is a dividend paying stock when it was pre-pandemic. So if the stock does recover, we can see dividends back in. But for now, there's no more dividends, and it is down basically where it was during the March pandemic crash. So this stock is doing pretty poorly, going from it recovered all the way to $30 per share. Now it's down to less than $10 per share. So buying and holding shares of the stock or even selling some cash gear puts would be the optimal play on this stock. As we can see, premiums are pretty high. So we could do easily a $7 cash secure put. That's going to give you a 1% return in a week, and it's going to give you a 90% chance of profit. Very, very safe play, honestly. If Carnival goes to $7 per share, which is a $3 drop in stock price, then we're going to be making some money here. 1% return, and if we do end up getting assigned shares at their $7 cost basis, that is a very solid cost basis to own Carnival Cruise Line shares of. That's about it for this video. 4 stocks to watch as well as some potential plays. Thanks for watching.